Question 1. General insurance concepts. Which of the following best defines the principle of subrogation in insurance contracts? A. The insurer has the right to take over the insured's rights to recover damages from third party. B. The insured must report all losses immediately to the insurer. C. The insured can recover more than the actual loss from multiple sources. D. The insurer is obligated to provide coverage regardless of policy exclusions. Answer A. The insurer has the right to take over the insured's rights to recover damages from third-party. Explanation. The principle of subrogation allows an insurer, after paying out claim, to assume the insured's legal rights to recover damages from third party responsible for the loss. This ensures that the insured does not profit from the claim and helps the insurer recoup costs. A. Correct. Aligns with the principle of indemnity, ensuring the insured is compensated without gaining financially. B. Incorrect. Reporting losses promptly is critical, but it relates to claim handling, not subrogation. C. Incorrect. Recovering more than the actual loss violates the principle of indemnity. D. Incorrect. Coverage depends on policy terms, including exclusions, and this is unrelated to subrogation. Relevant rule. Indiana Department of Insurance regulations emphasize insurers' rights to subrogation for cost recovery in cases involving third-party negligence. Question 2. Scenario-based question. Group health insurance scenario. Sarah works at a company that offers group health insurance plan. She recently switched from full-time to part-time status and lost her coverage. However, her employer notified her that she is eligible to continue the same coverage under COBRA. Sarah is unsure of her options. What must Sarah do to ensure continued coverage under COBRA? A. Pay the initial premium within 60 days and continue coverage without gaps. B. Notify her employer within 90 days of her election to continue coverage. C. Accept reduced coverage as part-time employee and apply for additional private insurance. D. Wait for the open enrollment period to reapply for the same coverage. Answer A. Pay the initial premium within 60 days and continue coverage without gaps. Explanation. The Consolidated Omnibus Budget Reconciliation Act, COBRA, allows individuals to continue their group health coverage for a limited period after certain qualifying events, such as reduced work hours. A. Correct. COBRA rules require that the beneficiary elect continuation and pay premiums within 60 days to avoid coverage lapses. B. Incorrect. Notification must be within 60 days, not 90. C. Incorrect. COBRA allows continuation of the same coverage, not reduced coverage. D. Incorrect. COBRA is separate from the open enrollment period. Relevant rule. Federal COBRA regulations applied to employers with 20 or more employees in Indiana supplements these provisions to ensure compliance and consumer protection. Question 3. Affordable Care Act account. Under the Affordable Care Act account, which of the following services is considered an essential health benefit that must be covered by all qualified health plans? A. Long-term care services. B. Cosmetic surgery. C. Pediatric, dental and vision care. D. Experimental treatments for unapproved therapies. Answer C. Pediatric, dental and vision care. Explanation. The account mandates that qualified health plans cover 10 categories of essential health benefits, including pediatric services such as dental and vision care. A. Incorrect. Long-term care is not considered an essential health benefit under the account. B. Incorrect. Cosmetic surgery is excluded unless medically necessary. C. Correct. Pediatric, dental and vision care is explicitly listed as an essential health benefit. D. Incorrect. Experimental treatments fall outside of ACA requirements unless part of a clinical trial. Relevant rule. Section 1302(b) of the ACA outlines essential health benefits which must be provided in all compliant health insurance plans. Question 4. Health insurance basics. What is the primary purpose of the free look period in health insurance policies? A. To allow the insurer to revise the terms of the policy. B. To enable the insured to review the policy and cancel it for a full refund if dissatisfied. C. To mandate that claims filed within this period receive expedited processing. D. To give the insured time to request additional coverage options. Answer B. To enable the insured to review the policy and cancel it for a full refund if dissatisfied. Explanation. The free look period is a consumer protection measure that allows policyholders to review their insurance policies and cancel them without penalty, typically within 1-0-3 days, depending on state regulations. They're incorrect. The insurer cannot revise the policy terms once issued. B. Correct. Ensures consumer satisfaction and aligns with transparency practices. C. Incorrect. Claims processing timelines are independent of the free look period. D. Incorrect. Additional coverage requests are unrelated to this provision. Relevant rule. Indiana mandates a minimum free look period for health insurance policies, typically lasting 10 days from receipt. Question 5. Scenario-based question. Managed care plans scenario. Mark is enrolled in a HMO through his employer. He plans to see specialist for non-emergency condition, but wants to bypass his primary care physician PCP. What is likely to happen if Mark schedules the appointment directly with the specialist? A. The specialist visit will be fully covered as long as Mark notifies the HMO afterward. B. The visit will not be covered unless referred by his PCP. C. Mark can appeal to the HMO after the visit for retroactive coverage approval. D. The HMO will automatically adjust Mark's deductible to cover the specialist's fees. Answer. B. The visit will not be covered unless referred by his PCP. Explanation. HMOs typically require members to obtain referrals from their PCP before visiting specialists to control costs and ensure appropriate care. A. Incorrect. Coverage requires pre-approval, not post-notification. B. Correct. Referrals are essential for HMO coverage of specialist visits. C. Incorrect. Appeals for retroactive approval are rarely successful without a referral. D. Incorrect. Deductible adjustments are unrelated to referral requirements. Relevant rule. Indiana law incorporates federal managed care regulations, emphasizing the role of PCPs as gatekeepers in HMOs. Question 6. Disability income insurance. Which of the following statements about short-term disability (STD) insurance is true? A. STD policies typically cover disabilities lasting up to 5 years. B. Benefits from STD insurance are tax-free if the employer pays the premiums. C. STD coverage is more common in employer-sponsored plans than long-term disability insurance. D. STD insurance does not require an elimination period. Answer. C. STD coverage is more common in employer-sponsored plans than long-term disability insurance. Explanation. Short-term disability insurance is often provided as part of employer benefits due to its low cost and shorter coverage duration compared to long-term disability insurance. A. Incorrect. STD policies generally cover disabilities lasting up to 6 months. B. Incorrect. Employer-paid premiums make benefits taxable to the employee. C. Correct. Employers are more likely to offer STD plans due to affordability. D. Incorrect. Most STD policies include a brief elimination period, typically 7-14 days. Relevant rule. Indiana aligns with federal tax treatment rules for disability insurance benefits and premiums. Question 7. Long-term care (LTC) insurance. Which feature in long-term care policies ensures that benefits increase over time to keep up with inflation? A. Waiver of premium. B. Inflation protection. C. Non-forfeiture benefits. D. Guaranteed renewability. Answer. B. Inflation protection. Explanation. Inflation protection allows policy benefits to grow over time, maintaining purchasing power in the face of rising costs. A. Incorrect. Waiver of premium pertains to premium payments, not benefit growth. B. Correct. A critical feature to ensure sufficient coverage in the future. C. Incorrect. Non-forfeiture benefits preserve some value if the policy lapses. D. Incorrect. Guaranteed renewability ensures the policy remains in force but does not address benefit levels. Relevant rule. Indiana partnership LTC policies require inflation protection for younger applicants under state guidelines. Question 8. Indiana state-specific laws and regulations. In Indiana, what is the primary purpose of the Comprehensive Health Insurance Association (ICHIA) to provide financial aid for low-income individuals to purchase insurance? B. To offer insurance to high-risk individuals who are unable to obtain coverage elsewhere. C. To manage claims disputes between insurers and policyholders. D. To ensure compliance with Federal Affordable Care Act account mandates. Answer. B. To offer insurance to high-risk individuals who are unable to obtain coverage elsewhere. Explanation. ICHIA provides coverage to individuals with pre-existing conditions or high-risk health profiles, acting as an insurer of last resort. A. Incorrect. Financial aid is not the focus of ICHIA. B. Correct. Addresses market gaps for individuals denied coverage. C. Incorrect. Claims disputes are typically handled by the Department of Insurance or courts. D. Incorrect. ICHIA predates the account and serves a different function. Relevant rule. Indiana Code Title 27 establishes ICHIA to ensure access to health coverage for high-risk individuals. Question 9. Ethics and professionalism. What is considered an unethical practice under Indiana insurance regulations? A. Recommending a policy that meets the client's stated goals. B. Explaining policy exclusions clearly to client before they purchase plan. C. Twisting or encouraging policyholder to cancel an existing policy in favor of less favorable one. D. Providing accurate written premium quotes to prospective clients. Answer: C. Twisting or encouraging a policyholder to cancel an existing policy in favor of a less favorable one. Explanation: Twisting is a form of misrepresentation that persuades clients to replace policies unnecessarily violating ethical standards and consumer protection laws. The incorrect recommending suitable policies aligns with professional conduct. B. Incorrect. Transparency about exclusions is an ethical obligation. C. Correct. Twisting breaches ethical and legal requirements. D. Incorrect. Accurate quotes are required by law. Relevant rule: Indiana's Unfair Trade Practices Act prohibits twisting to protect consumers from harmful sales tactics. Question 10. Claims and payments. Which of the following is required for a valid claim under Indiana insurance regulations? A. Filing the claim within 12 months of the incident. B. A completed claim form submitted with all supporting documentation. C. A notarized statement from the insured's attorney. D. Payment of claims processing fee by the insured. Answer: B. A completed claim form submitted with all supporting documentation. Explanation: To process a claim, insurers require fully completed forms and relevant documentation to verify the loss and determine coverage. They're incorrect. Timely filing is important, but the timeline varies by policy. B. Correct. Completeness and accuracy are essential for claim validity. C. Incorrect. Notarization is not typically required for claims. D. Incorrect. Insureds are not responsible for claims processing fees. Relevant rule: Indiana's timely filing regulations ensure that insurers process claims efficiently but rely on complete submissions by the insured. Question 11. Auto insurance coverage. Under Indiana law, which type of auto insurance coverage is mandatory for all drivers? A. Collision coverage. B. Liability coverage. C. Comprehensive coverage. D. Uninsured motorist property damage coverage. Answer: B. Liability coverage. Explanation: Indiana requires drivers to carry liability insurance to cover bodily injury and property damage caused to others in an accident for which they are at fault. A. Incorrect. Collision is optional and covers damage to the insured's vehicle. B. Correct. This is the minimum required coverage. C. Incorrect. Comprehensive coverage is optional and covers non-collision events. D. Incorrect. Uninsured motorist coverage is often offered but not mandatory. Question 12. Insurance fraud. Which of the following actions is considered insurance fraud in Indiana? A. Submitting a claim for actual damages caused in an accident. B. Deliberately exaggerating the value of a loss to receive higher compensation. C. Asking for clarification on policy terms after filing a claim. D. Requesting a second opinion for a medical issue covered by insurance. Answer: B. Deliberately exaggerating the value of a loss to receive higher compensation. Explanation: Inflating claims is a form of insurance fraud punishable by fines, denial of the claim, or legal action. A. Incorrect. Filing legitimate claims is the insured's right. B. Correct. Fraudulent claims harm insurers and violate the law. C. Incorrect. Clarification on terms is not fraudulent. D. Incorrect. Seeking second opinions is standard practice. Question 13. Commercial property insurance. What is typically covered under the business interruption portion of a commercial property insurance policy? A. Employee wages. B. Physical damage to the insured property. C. Loss of revenue due to business closure after a covered event. D. Legal defense costs. Answer: C. Loss of revenue due to business closure after a covered event. Explanation: Business interruption coverage compensates for lost income during downtime caused by a covered peril, such as a fire or flood. A. Incorrect. Employee wages may be indirectly covered if part of the business income calculation. B. Incorrect. Physical damage is covered under the property damage portion. C. Correct. Specifically addresses revenue losses. D. Incorrect. Legal defense costs are covered under liability policies. Question 14. Life insurance beneficiaries. If a life insurance policyholder in Indiana names a minor as a beneficiary, what typically happens to the proceeds upon the insured's death? A. The proceeds are paid directly to the minor. B. The proceeds are held in trust or managed by guardian until the minor reaches legal age. C. The insurer chooses an adult to manage the proceeds. D. The proceeds are forfeited until the minor becomes an adult. Answer B. The proceeds are held in trust or managed by a guardian until the minor reaches legal age. Explanation: minors cannot legally manage life insurance proceeds, so funds are placed under guardianship or trust until they reach maturity. Question 15. Health savings accounts HSAS. What is a key benefit of contributing to a health savings account? HSA. Contributions are taxed as ordinary income. B. Unused funds are forfeited at the end of the year. C. Contributions and earnings grow tax-free when used for qualified medical expenses. D. HSAS are only available to individuals over 65. Answer: C. Contributions and earnings grow tax-free when used for qualified medical expenses. Explanation: HSAS provide tax advantages for saving for healthcare costs, as contributions, earnings, and qualified withdrawals are tax-free. Question 16. Inland marine insurance. What type of property is commonly insured under an inland marine policy? A. A family home. B. High-value portable items such as jewelry or fine art. C. Automobiles. D. Commercial buildings. Answer: B. High-value portable items such as jewelry or fine art. Explanation: inland marine insurance covers goods and property in transit or specialized items not adequately covered under standard property policies. Question 17. Workers' compensation. In Indiana, workers' compensation coverage is required for A. All businesses, regardless of size or employee count. B. Only businesses with more than 50 employees. C. Most businesses with employees, but some exemptions exist. D. Sole proprietors with no employees. Answer: C. Most businesses with employees, but some exemptions exist. Explanation: Indiana law mandates workers' compensation coverage for most employers, but certain small businesses and independent contractors may be exempt. Question 18. Umbrella insurance. What is the primary purpose of an umbrella insurance policy? A. To provide basic liability coverage for personal property. B. To offer additional liability coverage above the limits of standard policies. C. To cover gaps in health insurance. D. To ensure property damage claims are fully paid. Answer: B. To offer additional liability coverage above the limits of standard policies. Explanation: umbrella policies provide extra protection against significant liability claims such as lawsuits or catastrophic accidents. Question 19. Indiana Fair Plan. The Indiana Fair Plan is designed to A. Provide affordable health insurance for low-income residents. B. Ensure access to property insurance for individuals unable to obtain coverage in the standard market. C. Guarantee flood insurance coverage for all property owners. D. Offer liability insurance for high-risk individuals. Answer: B. Ensure access to property insurance for individuals unable to obtain coverage in the standard market. Explanation: the Fair Plan helps individuals secure property insurance if they are deemed high risk and denied coverage by private insurers. Question 20. Policy cancellation. Under Indiana law, what is a valid reason for an insurer to cancel an auto insurance policy after it has been in effect for 60 days? A. The policyholder purchased a second vehicle. B. The policyholder failed to report a minor accident. C. The policyholder's driver's license was suspended. D. The policyholder requested higher coverage limits. Answer: C. The policyholder's driver's license was suspended. Explanation: after the initial 60-day period, Indiana law allows cancellation only for specific reasons such as license suspension, non-payment of premiums, or material misrepresentation. Question 21. Homeowners insurance exclusions. Which of the following is typically excluded from standard homeowners insurance policies? A. Fire damage. B. Theft. C. Flood damage. D. Liability for injuries on the property. Answer: C. Flood damage. Explanation: flood damage is typically excluded from standard homeowners policies and requires separate flood insurance through private insurers or the NFIP. Question 22. Indiana Insurance Guarantee Association. What is the primary purpose of the Indiana Insurance Guarantee Association? A. To provide legal advice to policyholders. B. To protect policyholders in case an insurance company becomes insolvent. C. To set premium rates for all insurance policies in Indiana. D. To arbitrate disputes between insurers and policyholders. Answer: B. To protect policyholders in case an insurance company becomes insolvent. Explanation: The association ensures claims are paid up to certain limits if an insurer becomes financially unable to meet its obligations. Question 23. Disability insurance. What is the primary purpose of disability insurance? A. To cover medical expenses related to a disability. B. To replace lost income when the policyholder is unable to work due to a disability. C. To provide financial support for family members in case of the policyholder's death. D. To cover the cost of home modifications due to a disability. Answer: B. To replace lost income when the policyholder is unable to work due to a disability. Explanation: disability insurance helps maintain financial stability by replacing a portion of the policyholder's income during periods of disability. Question 24. Deductibles in insurance. What is the purpose of a deductible in an insurance policy? A. To increase the overall premium. B. To lower the insurer's liability by requiring the insured to share in the loss. C. To eliminate the need for co-payments. D. To determine the policy's coverage limits. Answer: B. To lower the insurer's liability by requiring the insured to share in the loss. Explanation: deductibles reduce the insurer's risk and encourage policyholders to avoid minor claims by requiring them to pay a specified amount before the insurer pays. Question 25. Subrogation. What does subrogation mean in the context of insurance? A. The insurer transfers the policy to another company. B. The insured is required to purchase additional coverage. C. The insurer seeks reimbursement from a third party responsible for a loss after paying the insured's claim. D. The insured files claim for damages caused by their negligence. Answer: C. The insurer seeks reimbursement from a third party responsible for a loss after paying the insured's claim. Explanation: subrogation allows insurers to recover costs from third parties legally responsible for causing the insured's loss. Question 26. Inland marine insurance coverage. Which of the following is commonly covered under inland marine insurance? A. Damage to a personal vehicle. B. Construction equipment on a job site. C. A family home. D. A small business office. Answer: B. Construction equipment on a job site. Explanation: inland marine insurance covers movable or specialized property, such as construction equipment, while in transit or at temporary locations. Question 27. Professional liability insurance. Who is most likely to acquire professional liability insurance? A. A homeowner. B. A physician. C. A car rental company. D. A retail store owner. Answer: B. A physician. Explanation: professional liability insurance protects professionals, such as doctors and lawyers, from claims of negligence or errors in their professional services. Question 28. Auto insurance. No-fault states. Indiana is not a no-fault auto insurance state. What does this mean for accident claims? A. Each driver's insurance covers their own damages regardless of fault. B. The at-fault driver's insurance is responsible for damages caused to others. C. The state requires uninsured motorist coverage. D. Medical payments coverage is mandatory. Answer: B. The at-fault driver's insurance is responsible for damages caused to others. Explanation: in at-fault states like Indiana, the driver who caused the accident must compensate others for damages. Question 29. Peril-specific policies. What type of insurance policy specifically covers damages from a named peril such as windstorm or hail? A. Open perils policy. B. Named perils policy. C. Umbrella policy. D. Liability policy. Answer: B. Named perils policy. Explanation: named perils policies provide coverage only for risks explicitly listed in the policy, such as fire, theft, or windstorm. Question 30. Actual cash value versus replacement cost. What is the difference between actual cash value (SCV) and replacement cost in property insurance? SCV provides the cost to replace the item without accounting for depreciation, while replacement cost factors in depreciation. B. Replacement cost includes depreciation, where ACV does not. C. SCV factors in depreciation, while replacement cost covers the full cost to replace the item. D. Both terms mean the same thing in property insurance. Answer: C. SCV factors in depreciation, while replacement cost covers the full cost to replace the item. Explanation: SCV pays the depreciated value of the damaged item, while replacement cost reimburses the amount needed to replace it with a new equivalent item.